share my screen. Okay, hi everybody. I hope you can hear me. This is my first time ever hosting a webinar, and it's the first time I'm using software that I have no idea it's Zoom. And I've done other webinars where I was a guest, so I'm now driving the panels, and there's a whole bunch of things going on here, and hopefully I'm going to do a fair job. I'm a pretty punctual person, so it's 7 o'clock, 7:01. I think I'm going to just kick off and get going, and people join if they. I just want to make sure everything's going according to plan here, and let me just see if there's a way that you guys can let me know that you can hear me. I'd hate to be talking all this time and nobody could. Is it possible? Let me just look if there's a chat here. Is it possible that somebody could just type in and say that you can hear me? Ah, good. Thanks, Gina. Okay. So I'll just minimize this and leave it there just in case we're going to touch on that. I wanted tonight to be really informal, and I've got a little bit of a PowerPoint presentation, but I'm not sure I'm going to use it. I think I'd rather just speak to you guys and actually dive in and show you the platform and talk you through it from the way I understand it. Just give me a second. I won't do this as we hit our stride, but I see there's a chat. I see and hear you well. Okay, good. That's all I needed to know. So I can invest my full energy and give over to you guys, and hopefully we'll all learn something tonight. And I also just wanted to share one other point. I was in two minds. Do I cancel tonight's webinar or don't I? Because Cyquation 2.0 is not fully functional, and I don't want to present anything on. I don't want to present static screens. I want to show you the platform, the way I interface with it, and hopefully share some of my vision and knowledge and all the rest. So I'm going to go for it. Anyone who feels they would rather come back at a time when everything is working fully, that's fine. No problem. You guys can just drop off as and when. I'm going to give this a go. It's the first webinar ever that Cyquation is hosting, and that's great. So here we are at our first page. I also just want to say I'm 100% open to criticism, and it's something I really want to encourage. I'm almost going to rely on you guys who amongst the let's call it the early few who are attending this webinar to kind of leverage you and tell me where you think we could do a better job than what we're currently doing. So I'm constantly striving to improve things, and I need feedback and so forth. So maybe just a little bit about me. I know a lot about myself, but I don't need a prompt here, but I'll just give you some highlights here that I can share. So I think it's important to tell you that I'm a trader by passion and by experience and all the rest. I'm not just somebody that's come up with an idea and have no background in actually physically trading and eating what I kill, for want of a better description. So I started actually trading when I was 13 with my bar mitzvah money. I'm a Jewish boy, and got some money from my turning of age. And yes, I was already starting at age 13. And then in 2002, I was working as an investment banker, and I had this vision that I could set up a fund, or I could trade the bank's proprietary capital and make money. And I convinced them, and I was lucky. They seeded me and moved me onto the trading floor, and that was back in 2002, and I've pretty much been trading ever since. So call it 17 years of full-time trading. and I had all the highs and lows that come with that trading. What's interesting, in the last few years, it's not so few anymore, it's now 7 years, I've spent most of that time incubating and developing trading talent. So if I can just take you back to 2012, actually I need to go back a little bit further. I need to go back and tell you how I met my co-founder Vlad, who has been on a journey with me for close to 10 years. I was running a fund. I moved from South Africa to Australia with my family, and I was looking for, I had a whole quant team in South Africa, and when I moved to Australia, I was looking to, outsource and run a remote team. And I came across Vlad. They were a team of 3 math PhDs called Math Gears, and he started doing some work for me as a consultant. And he had another partner, Eugene, who was also an assistant maths professor. The 3 of us were doing a lot of work together, and we came up with this idea of incubating traders, and that was in 2012. And we started a company called Rapper, and Rapper stood for Risk and Profit Analyzer, and we had a lot of success, certainly in early success with Rapper. We raised close to $60 million, and we allocated to traders, and we had what we called the Rapper score, which is a very different score to the current Cyquation score. But the reason why I'm raising this is because back in 2012, we had already spent a lot of time and energy and resources building a score to measure somebody's trading ability. And we were fortunate, we were approached by an American company who was also in the emerging manager space, and with a very famous co-founder, and they acquired our company. Well, they acquired our, the score and all that intellectual property. And that score came from things from a top-down approach, and the Cyquation score comes from things from a totally different perspective, and I'll touch on that in a little bit more detail as we move forward. But essentially, in 2015, towards the end of 2015, I was free, and Vlad was free to go our own way and do something new. And what we set our sights on, we wanted to build a platform that could help traders become more profitable. Now, we never ever have said we can make you profitable, because being profitable in trading is the holy grail. And well, let's call it in derivative trading, such as futures or CFDs, anything where there's a zero-sum game. And yeah, so we said we want to go and help traders do better. And what's the best way to start is to focus on where they're making mistakes, because everyone makes mistakes. And if you can identify where they're making mistakes and help correct them, you can behaviorally nudge them along the way to become more profitable. So that was the genesis of Cyquation. And yeah, maybe I just thought I can give you a couple. I had things here like Mike's philosophy. What can I'll just touch on these very briefly, because I want to get into the meat and potatoes of the webinar. So if I had to ask you who thinks they're going to be a profitable trader, I guess most of you would put your hands up and say you think you could be profitable. And we know that, depending, and I didn't put the statistics on here, but let's just call them roughly 75% of traders are not profitable. So it's interesting how so many people think they're going to be profitable. And the reason why most people think they're going to be profitable is because of overconfidence. And yeah, we really do think we can take on the 100-pound gorilla, the 1,000-pound gorilla. And I'm just going to share, I'm jumping around here, I'm just going to share a couple of other little things that I think are important in trading. Here's a partial solution from Einstein. Ego, I think ego is a big factor with traders. And he's got a little formula here that more the knowledge, less of the ego, and less of the knowledge, more the ego. It's kind of cute formula. And my last little bit of philosophy that I'll share with you is I'm a big believer in hurting someone with the truth is better than making them happy with a lie. So I'm quite a straight talker, and I think it's absolutely imperative to to drill down into what it is that you believe is your edge as a trader, because if you don't have an edge over time, you really won't make money. So it's important to face uncomfortable truths. So with that, let's jump in to the platform. I think I just want to kind of ask, plant some seeds for questions here. Just go through this very briefly. What we're trying to say here, what are you getting with Cyquation, is you get these insights. A lot of it's AI driven, not all of it. Some of it's behavioral and just general science, finance. We've got a capital allocation program, which is called Axie Select, and I'll talk you through some of that. And then we've got a copy trading platform. And I don't want to speak too much about this because there are various variations. This is a big subject that needs a lot of time and energy, and a lot is going on behind the scenes that I'm actually not really able to talk about freely. And I'd rather talk about stuff that I know I can talk about. And with that, let's jump in. So, oops, let's go to this one. So, before I talk about the equity curve and all that, I just want to touch on, probably some of you, well, most of you will have heard about the Cyquation score. It's a big, I'll go back here. Excuse the jumping around, but it's kind of, it's Michael Berman, that's me. I'm all over the show much of the time. So I just want to touch on the score because it's fundamental and it's really, really important. The idea behind the score is it's not a prediction that somebody's going to make money, but it's a probability edge. And if you look at the score in isolation, just on one trader, it's not going to necessarily help you to the full extent. It's designed to work within a cohort of lots of traders. So when you look at a bunch of traders and they've got high scores, and if you had to allocate money to that group of high scoring traders, you should do far better than average, far better. And not going to make this presentation a deep dive into the score. I'm happy to answer questions if that's where people want to go, but I'm eager to get to the actual dashboard and the platform itself. So just to kind of echo why I believe, why I'm really confident that our Cyquation score is powerful. If I take you through what this is the Axie Select program, and I'll just click on all here, which will take you back to inception, which goes back to November 2017. Is that right? 2 years, yeah. So we've almost come up for a 2-year anniversary. So you can see, there we go. November 22nd to the 21st of November 2017. And essentially what this chart equity curve is showing you is that we've allocated people who have a high Cyquation score above 75, and it's made up of now it's over 96 traders. Not all of them are active now. Many have blown up or dropped out for whatever reason, but I'm really proud that things are positive. And if you looked at our if you had a look at our table of returns, you can kind of see how things have tracked. And this is with no human intervention at all. It's rules based, and you make the rules, you hit a stop loss, you get dropped out, you have a chance to come back. It's all really rules based. And I need to update our landing page, but we've now allocated $5.1 million. I've actually been a little bit naughty here because I've only got approval for 5 million, but we've just allocated a whole bunch more capital for this past month, and gone over the limit. So I'm smacking myself for being naughty. Hopefully who I've got the money from is not going to be watching this webinar shout at me. But nonetheless, I aim to please. So let me just go and dive into now the equity, the equity curve, because I think this is a great place to start. And I'm going to just go to one slide here because I want to just illustrate what most platforms will do is they'll show you. Let me see if I can just make this so it shows one at a time. Cool. So this equity curve on this is a real vanity curve, equity curve on the left side here. You can see it going nicely in like a linear straight line from bottom left, top right, but it's showing daily data, so you have no idea what's going on in the course of the day. This is very typical of a martingale strategy where people show you only the, well, you don't know what's going on. They take in massive risk and are destined to fail. Inevitably, they will fail in due course, but you don't see it. And you know, if you had to see a typical martingale strategy intraday, this is what you would see. So you'd see all this massive intraday risk. So that's the premise, the main premise behind wanting to give you access to intraday data. Now, the part with Cyquation 2.0 that I'm really disappointed, we had a brief period where we actually had these 1-minute updates, but currently the equity curve updates every 15 minutes. And part of the reason why we've gone to this new backend is, and this whole new technology stack, is because we have so many accounts connected to our infrastructure that it is really limping, and our updates are not every 15 minutes, they lag. So I don't know the exact number, but there's probably 50,000 at the moment, like 50,000 MT4 accounts connected to our backend infrastructure, and we're trying to update those every 15 minutes has been a real challenge. So I was hoping to show you guys and be live our 1-minute updates. So 1-minute updates is our step towards going real time, where we'll be able to deliver it real time. And there's a lot of computation going on in the background. So I just want you to know it's not a trivial exercise, and to do it for 50,000 accounts and all that, and it's all in the cloud, running back all the way from inception. It's really not a trivial exercise. But yeah, let's look at so what we've got here is the green line is your equity curve. So it's your mark-to-market P&L, profit and loss. If you've got open positions, it's mark-to-marking them at the current price every 15 minutes. And then we've got this thing called VAR, which is value at risk. Now, for some people, well, for most people, that's actually a very complex formula and concept. And what I've tried to do here is to do it by way of a visualization, to try picture the yellow line, which is the VAR adjusted equity curve. Sounds like a mouthful. It's not really that complex. All it is taking this green line and adjusting it by the VAR. So what you should be then seeing this yellow line as like a safety net. And what VAR is telling you is that there's a probability of 1 in 5 in one of the next, sorry, not 1 in 5, 1 in 20 there's a 5% probability in the next day that you're going to hit your VAR limit or go past it. So current VAR on this portfolio is 11 basis points. So you can see the 13.72 is adjusted down to 13.58. And the way to understand this is that there's a 5% probability that your green line is going to drop below the yellow line. So it's as simple as that. Don't try and overthink it. Just know that this is the kind of risk that you currently are exposed to. And so I'm going to see if, yeah, and you can kind of see what's open. This is the current portfolio of this portfolio as things stand right now. you can kind of see where's the biggest exposure and what's contributing the most to risk. And VAR is taking all these things into account. It's taking volatility and correlation, so it's and covariance. So it looks how these different instruments relate to each other, and it sums it into one tidy little neat number, that number. So that's what's going on there. I'll just go, before I go into the advanced stats, I'll go straight to trades. There's a lot of trades here. So what you can see in this particular portfolio is there's 526 open trades. I see there's a question, so I'm gonna there's something being posted in the chat here, so let's have a quick squiz. What is the maximum DD allowed to qualify? Okay, good question. And I'm cool with being interrupted with questions, so during the presentation. So feel free to drop it in here. If others feel it's just, it's kind of breaking the flow, then just post and say, rather keep them till the end. I will give some time to Q&A. But just to answer Brian's question very simply, there is no max drawdown limit. The score takes care of everything. So you could, in theory, it's highly unlikely you would actually make it, but you could have a 99% drawdown, and if your score is positive, your score meets the criteria, and your account is profitable. In other words, it's more than 0.1%, a basis point in the black, you'll qualify for an allocation. I hope no one minds. I've got a whiskey next to me here, and I think it's a great time to have a little sip. Okay. So what you've got here is you can see your the open trades, and by the way, there's a way to adjust your account settings. If you don't want to share open trades or any trades with somebody, you don't have to. This particular account's got thousands, as you can see, thousands. So under account settings, you can choose if you want to be visible on the leaderboard. If somebody's observing you, you've accepted. Actually, you no longer have to accept. So somebody's observing you because they're interested in you. Consider yourself popular, but you don't have to show them any of the trades that you might want to keep proprietary. And obviously, I think it's really important for people to say a little bit about your strategy and about who you are. People are interested. There are a lot of people on the site, and here's a feature where you can request that you have a new start date, because one of the small bits of wisdom I can share is, I believe if you've had a big loss in your account, you have to really, let's just say you've lost 50%, you had a 50% drawdown. In order to get back into the profits, you need to make 100% return. So it forces you, even subconsciously, to make these big, dangerous, risky trades, and because you're haunted by this fact that you're not making profits. So I encourage people to leap forward and pick a date where you can start fresh. So just saving you going starting a whole new account and going through all that rigmarole, and you can do that over here. So I'm going to go to advanced stats and just kind of take you through it very, very quickly. Maybe it's all looking really juicy over here. What about showing you show me the money? This is one of my accounts that I'm trading. It's a demo account, but very proud, nice and profitable. Just give you a quick squiz at the equity curve, just to give you a feel for my trading. One thing I've always said to people who've invested with me, never expect linear returns from Michael Berman. I'm an asymmetrical type of trader. I said, you'll always see stuff. I love to trade extremes. So I typically chase extreme markets that have gone way too bearish or way too bullish, and inevitably you're early, or I'm always early in those kind of situations. So I tend to wear a bit of pain. But anyway, that's that. So I wanted to show you under advanced stats. So let's look at my account, and so nice Sharpe ratio. I always say a Sharpe ratio above 1 is decent, especially if it's over a year. This counts 1 year, 8 months. And so I mean, you can, at your leisure, look at all these other things. What's of importance here is the breakdown of the score. So the risk behavior and history are, okay, let me go into just quick touch points on what skill is. It's really a black box, but it's an AI driven black box. But the fundamental philosophy behind it is to try and figure out if somebody has got an edge. And it kind of, you could have skill. Let's just say, for instance, you could have skill of 90 out of 100, so super high skill, and your account could still be losing money. And the reason for that is, it sounds counterintuitive, but the reason is simply because you probably put too much risk on one trade. So let's say, for instance, you've got a skill factor of 90. So you're highly skilled. It's highly probable that you've got an edge, but then you go and put your entire equity on one trade max, and you go big. You know, that's kind of 50-50, or even if it's 55 or 60-40, there's a very real chance, there's a 40% chance you're going to blow it up. So it doesn't mean you don't have edge. It means you're an idiot the way you're trading. Your risk is out of control. So skills are a very important factor, because without it you don't have edge, and then over time your returns will, you know, sum to zero or worse. Risk is just the way it sounds. It's how you manage your risk, and it's an elaborate VAR calculation, value at risk calculation, which we use. Behavior is how there are a couple of inbuilt alerts that that create the behavior score. And history is really is the way your risk-adjusted returns have actually transpired. So we use Amiga ratio, and I think there's a. I click on this. You go down there, and you'll see more details on what the Amiga ratio is. But we've got a little bit of a smart way of. It's not just the raw Amiga ratio that makes up your history. It's Amiga ratio calibrated for our entire audience of, you know, 100,000 odd accounts making up our database. So it's a recalibrated Amiga ratio, without going into all the nasties. Okay, the rest, I think largely you kind of, I'm sure a lot of you will know it. So unfortunately, a big chunk of the alerts that we have worked on are dependent on this 1 minute updating. And because the 1 minute updating is, let's say, at 95-96% accuracy, we didn't want to release them yet. So here's just a list of some of them. The key point, what I can circulate all of this. I'm not going to read through what each alert's doing, but I think what will be quite cool is that you'll have the ability to set these equity alerts around equity. So there's the built-in stuff that some of you have already become familiar with, the alerts that Cyquation has had for the last 3 years, that unfortunately are not being triggered in the system because of this transition phase. Really frustrating. I'm sure for some of you it's frustrating. For me, I don't have any hair left to pull out, so it's super frustrating for me. But we get in there bit by bit. how does that saying go? The only way to eat a monkey is one mouthful at a time. So I don't know if that's an appropriate analogy, but what we will have is give you the ability to set these alerts around your equity. Now you can currently go back to, if I go back here, you can set, we've just launched these are market alerts, so you can go and create a new alert and pick something here, and you can then choose the number, like a streak. If there's been a streak of let's just do something here, select direction, it's rising and it's been for 5 days in a row, send me a mail, send me an SMS. So you can do that, but there's actually quite a cool tool we have about to present itself that will be used in combination with this, which will be of a lot of value. We just go to the leaderboard. Keeping an eye on time just to see. Let me just check in with you guys. Are you saving this webinar and are you going to send it to us? Yeah, with pleasure. I am recording. Let's check. Let's make sure that we are. I can see that it's recording. So yes, with pleasure. Okay, so here is the leaderboard. I don't need to state the obvious. There are a couple of things I can think of that I'd like to include. I've got quite a few ideas that we're going to be able to introduce and make this a little bit more exciting. And like, for instance, where was this guy a week ago? Has he been? How long has he been at ranked #1? Also, I think we need a search feature up here so you can find people. Okay, the Pro Accelerator. This is all the Axi Select program, and just I'm kind of letting you guys in a little secret. This is a name that will change, but I'm running an internal staff competition with we are trading. So we officially launched it yesterday, but it says accounts are a little bit older. It did start a little bit longer than yesterday. I'm being killed at the moment. Well, the last few days I've been fighting the S&P rally. And this competition is actually for an iPhone 11. It's going to run until 24th of December, just before Christmas. Out of interest, let me know if you guys think like running a competition like this alongside what we're doing with a decent prize is interesting. We actually ran a competition, just by way of going on a little slight detour here, but we ran a competition in Thailand, and it ran for we had 2 seasons actually, and the winners won a total of $30,000 US. So winner won $15,000. Second prize got $10,000, and third $5,000. So $30,000 for 5 months of trading was, and it was based on the. Would you believe it was based on the Sarquasian score, and the winner was lying second until the last day, and he went for it, and he came first. Anyway, let's get into some trading tools. So, okay, this is. I honestly believe that people don't realize the value of this particular tool, this OFSI, and what you're about to receive, I'm telling you, is absolute gold. And I know that people are paying for real-time brokers feed. So in other words, exactly what you're seeing here, but in real time, they're paying $10,000 US a month. And none of them are able to segment it. Like, this is where I think the real value is, personally. But before I get into the real value, so currently, if you have an Axie account, you can see this. You can see this on hourly updates. But with, hopefully in the next week or two, this is going to drop down to 1 minute updates. Now, I'm just not sure people realize the value, and if they're not going to realize the value for the extra cost that I'm incurring with streaming all this kind of heavy data and providing all this analysis, I might just make it delayed or make it hourly again. But let me just talk you through this in a nutshell. This tab's the number of trades. So you can see, let's look for a common. So there's 7,633 trades currently on euro bullish. Are we on hourly? Let me just check. We're on hourly. Yeah, I think we're on hourly. So yeah, 7,600 trades bullish. If you want to look at the trade size, that is like factor in the lot size. You can see that we actually not see how deceptive that is, based on volume, and you can see the size. So that's 6,870 lots. You do the math. What that translates into 100,000 a lot. So it's that's the size, and you can see it's bearish on the euro dollar. Now let's look at the number of traders making up this. So 1,677, and they are slightly bearish. So that's interesting. But now you can do a lot more. Let's say, for instance, we're interested in the wisdom of the smart crowd. That's the whole crowd. Let's say people with the Sarquasian score above 60. We want to see how, what are they holding with their euro? So yeah, we see number of traders, 60% are long euro. So you can do a whole bunch of drilling down and segmenting. You can, you want to see people with who are only, what is this percentage? I'll just go in here, easier to do. 0. So you don't want people who are losing money and to make part of your vote. And you can see different, you can go to town with that. And what OFSI is, the chart is doing here is, if I just zoom out, let's just go to euro dollar, and let's go to okay, I'll go hourly. So what you can see, there's a time series of that. Maybe if I go, you can see it visually a little bit better. Well, yeah. So if I look at it on a daily chart, you can kind of see how it oscillates between bullish and bearish, and you can apply the filters that you had and get that. There's also an ability to see this one. No, okay. We actually have built an MT4 EA for this. We haven't released it actually. We will soon, where you can actually see this in your MT4 as an not as an EA, as an indicator, which will give you the ability to build a trading strategy off that. Currently, we've got just I think it's the table at the bottom. Yeah, you can see this table on your MT4 terminal by downloading the indicator file. I'll jump to price journey. Wow, what is that? Euro's had a big bounce today. So let's just look at Aussie dollar, pound, just on Nemesis here. We can add one. We can add up to 5. In theory, we could go much more, but just do this. So the whole idea behind this is, I want wherever wherever the current tick is for the day, doesn't matter if you were, so for instance here, this particular one, what is this? So I think it's the euro, not the euro. Yeah, so for instance, this is gold and it's currently up, even though it spent most of the Asian session in the red, it's currently green, but I want you to be able to see throughout the day what's happening, and this is live updating. So yeah, I just it's a tool. I know that lots of other places give you something similar, but as far as I'm aware, most only allow you to do one overlay symbol. So yeah, you get 5, and you tell us this is adding value to you, and you want 10, we'll give you 10. That's that will be user driven. Let me just show you quickly. I haven't used this in a while, actually, the open close trade. We are really bad at naming things. Yeah, let's look at my Beast account. I can show open trades, and there we go. I've been trading the S&P 500 mainly. Look at it on hourly. Let's start with the daily because it will be too. So what do we got here? So here you're able to see how I've been trading the S&P 500. Let's see if I can add more. No, okay, so let me talk you through this. Red means I went short. Okay, so I went short there and exited there. You can see I went short there, but I exited higher, so that was a losing trade. Or I went short there, exited there. So sometimes I actually find it's easier to look at it on the buy and sell, on the win loss. So yeah, you can tell I obviously went short. On that one, I obviously went long, because it starts here and it goes up, and you can kind of get a flavor for the way I've been trading this. You can see that dotted line, because those are the 2 open trades I've got, and you can see that I went short. So that they yeah, so you can look at what I nearly forgot to show you this. So this is your cumulative profit, and where this is useful is you can see that there were three trades, and the size was two lots on this particular trade, and it just shows you if you just add into winners and losers and all that kind of stuff, and this is your trade's cumulative P&L. So over time, I've made money over. When I've traded the S&P, it's been actually very profitable for my trading. And you can, whatever accounts you have connected, you can actually, I didn't even realize this, you can look at accounts that you're observing. Didn't realize it. Pretty cool. Only problem is you don't know who this is. We don't know who it is. But you've got the choice of looking at all that. These are the instruments that they would have traded in that account. Okay, so that is the 4 like built-in tools into the app. Now I'm going to take you into our sandbox. So what is the sandbox, and what's the philosophy and reason for this approach? So we've got a data science team of 5 people. These are really smart people, and it's a shame that people, as part of Cyquation, are not really taking full advantage of them, because I'm effectively giving, well, not me, Cyquation is giving a resource to our users where we're openly inviting you to give us ideas that you think are good ideas for traders that will help them make money, and we'll go build it for you. So just to give you an example, so you can click on this and it'll take you into the sandbox. What I just did is I went and populated, would you believe my Google Home is picking up my voice and asking me things. So what I did is I just opened this. So here's the trading tool sandbox. Here's a shortcut if any of you are wanting to get there. It's charts.cyquation.com. Okay, so there are how many? 1, 2, 3, 4, 5, 6, 7, 8, 9. And the thinking here is we can build almost all of our analysis, like data science work, is done in Python, and basically we can create a visualization of our Python notebooks very easily, and they kind of look like this. So this is now sitting on a separate server outside of the app, and I'm just going to talk you through a few of them, and we want you guys to tell us that you like it or you don't like it. Enter some, make some comments here. Show us some love. Tell us where we can improve it, or that we're going down the right direction, or give us more, or whatever the case may be. And from there, we'll actually, focus and prioritize our data science team so that they can output stuff. And they are quick coders, and they're smart and willing to help. So yeah, let's take a look at what was I trying to achieve here. This is just like, so what are we looking at? Let's look at gold. I'll put one in. Let's look at pound. Don't need end. I'll add the euro. So what we've got here is over 1 year. So this is a 1 year look back. You can see the returns there. You see them over there. And what I wanted to be able to do is say, let's have a look at how did this unfold through time. So it goes, because I wanted to be able to do it both ways. I'll show you what I mean by that now. So you can now drag this through time and kind of see how the particular indices that you've invested in have performed. I also wanted to go back. I wanted to be able to swivel it both ways. So here I can sit and say, okay, we know where things are right now, but let's go back. Just had a thought where it could be a bit more easier to understand. I should make these numbers, when I'm dragging this, I should make them reverse so I can see how many days ago that was. But the other way to do it is to look at the bottom axis and see where do you want to start it. Okay, so let's just pick April. Say, how have things performed, these indices performed since April? And here you can see gold has done 15% since April. So it's pretty cool. Just want to see if we've got Bitcoin in our list. No, we don't. Okay. Why did I have to mention the one that we don't have? Silly me. What is this one? This is called symbols correlation. So this is really quite funky. If you look at the definition, it's called dynamic time warping, and there is a link here. You can go and read it. Very complicated stuff. It's a type of correlation matrix, but it uses machine learning. Very smart. What it's doing here, let me just talk it in plain language. It's like, if you're looking for things that are tightly correlated, here's what you need to look for first. You look for where these bubbles are closely next to each other. So as you would expect, this is Bitcoin, Litecoin, Ethereum, and Bitcoin USD. So you can see where there are clusters of behavior over here. What is going on here? Netherlands, CAC, okay, Europe. So these are Europe indices. So it's not just classic. It's not classic correlation. It's a lot more deeper and more subtle. It will find correlations that that the average person, you wouldn't find it with the typical, I'm just looking with Brent correlated, yeah, as you would expect. So WTI is the oil, the main oil future symbol. So yeah, the correlation is picked up there. So from there, from here, you can actually identify what are highly correlated, and then you want to go to the lead lag. I know I opened it before. Here we go. So what you can do here is, let's just say, for instance, you found something that I'm just going to leave what we've got going here. Yeah, I'll just leave what we actually had here. So there's euro versus Japanese yen. Now, what are we trying to find here? And this needs a whole deep dive. There's a little bit of explanation here. I think we need more. And maybe we should start a whole discussion. I think we should over there to describe what's going on here. But I'll just tell you in broad brush what's going on here is, once you know something's correlated, the next thing is to say, okay, well, which one leads and which one lags? Because knowing that is entry into the Holy Grail status. And please never for 1 minute think that we promoting that we've got any Holy Grails here. But this is a really interesting. This is using this dynamic time warping, and it's using these machine learning algorithms to find which one is lagging. And what we've done is kind of as a sanity check, we've inverted the bottom pane, and it should be the inverse behavior of the top one. If it's not, then they're anomalies, and you shouldn't necessarily trust the signal. So, but if they are nicely inverted, you can, take information away from that. But this needs a lot more explanation than what I've just given. I want to go back. So this is something that I think is pretty cool. I'm just having a quick check at the time. I'll probably wrap it up in the next 5 or so minutes, and then open it up for questions for those who've stuck around. Hopefully some of you are still stuck around, and I haven't got going talking to myself. What I've done here, you can look at any symbol, but let's just stick with this one. And what are we saying? We look back 2 years to 2017, and we've set a threshold. We've said we want to know over the last 2 years, show us when the S&P 500 has moved 2.5%. We must put a percentage here just so you know that 2.5 means it's percent. And we want to know it's in both directions. We want to know, has it moved 2.5% up or down, and show us 12 of those events. And you hit that, and this is what you're seeing here. So you've got the 12 times that there's been a 2.5% move in either direction over the last 2 years. I mean, just want to see. Okay, I'll see somewhere else. I'll show you on the table to see how many times it actually happened, because we're only showing 12. But what you can see here, is this is the day it happened, and this is days after the move. So what we've done is we've shown you what's happened 10 days after that particular move. And in fact, I think it's focus on let's just say on the up, and try and illustrate what I wanted to actually show you. Okay, so there weren't 12 times that it's gone up, but let's look. What is it? What do you see straight away from this chart is that it's random. After the market has gone up 12 days, everyone thinks, oh, it's gone up. It's gone up. Sorry, not gone up 12 days. Sorry, it's gone up 2.5%. That you think, okay, if I wanted to go short after 2.5% up move, I'll make money because look, it's done this. But you can see that almost equally it's gone up over the next 10 days. And you can look at, this will tell you days after the move 9, and tells you the return. But now you can actually look at, if you want to go and look at individual events, so here you can see how many times it's happened up on the top here. And what have we done? We've given you this vertical line is the day it happened. So it went up 2.5% on, what are we, is this, are we in, sorry, we're in the fourth, we go back to where I was here, sorry, the 6th of August. So on the 6th of August, market went up 2.5%. What was it doing in the 5 days prior? So you can see that it was coming, the market was coming down for the 5 days prior, and then so it looked like it had a 2.5% down day as well, by the way, but then it went up, and then you can trace what did it do over the next 10 days on an individual basis. You can look at it like that. What is this? I've forgotten what this does. Yeah. So this is the intraday. Yeah. Okay. So this is showing you on a 15-minute chart what was. This is what the 2.5% move day looked like. Am I right? 6th of August. Yeah. This is the intraday of the 6th of August. So you can kind of just have a look, see. And then the last table view is, you can see there were 13 events where the market has moved up. Sometimes you'll see there's quite a strong difference between intraday moves and the closing price. So here's an example. It went up 3.8%, but it actually closed on the day only up 1.38. So in this instance, it would not have picked up. It would not have picked up. It would have. The 6th, it picked it up there. So silly me. Okay, so you can play around with this. There's some nice variations of this kind of chart coming through. Just to give you a quick heads up, we go. Let's say, for instance, a gold cross move, which is typically when the 50-day moving average goes above the 200-day moving average. So here we've just used the threshold as a percent, but I know many of you are technical traders, and I'm a numbers guy at the end of the day, because somebody says, "Oh, I trade the gold cross." So what does it mean? You trade the gold cross. Let's look. Just because it looked like it went favorably for you a couple of times, let's look at the actual numbers and get a more holistic view. So just want to show you one or two quick other ones that I think are worthy of your time. Does anyone mind if I carry on a few more minutes? I'm going to just look if anyone's posting any complaints. Doesn't look like it. So I'm going to just quickly show you one or two more. Oops. Somebody's got something to say. Hey, thanks. Okay. So I wanted to show you what is MAE, MFE. So this is maximum adverse excursion versus maximum favorable excursion. What are we trying to say? I just want to see what our notes say here, if they're any good. So what's going on here is, let's start with MAE, maximum MFE. Let me start with the positive. So you got an axis here called profit. And you got an axis here, the x-axis here, which is telling you drawdown. So when you look at these green dots here, let's go to the top one. What it's saying to you is that you can see we've had very little drawdown, because if I drop the vertical there on the vertical line, it's very little. How much was the drawdown? We've had $211 of drawdown, and what was the peak? The peak profit on this particular trade, so it was on GB pound yen. The peak profit was 3,831. Sorry, 3,802, and we closed it at 3,081. So you can see that this trade was closed out pretty close to its all-time high. Didn't like shoot up, and that we had a big peak, and then we closed it a long way down. So let's go look at what the reds are your maximum adverse. When it's red, it ended in losses, and when it was green, it ended in profits. So we look at this one. What happened here? So there was a $4,000 drawdown, okay, and its peak loss. Okay, its most favorable position was, so it was a loser from the start, and its most favorable was minus 111 pounds, but dollars, and but it ended down 276 loss. So there's all these different variations of the same thing. It's kind of a preference, but it's useful when you're trying to understand more about the way you're taking your profit and loss. You know, do you exit always at your maximum drawdown, or do you ride it and typically you bounce back from that? Like, how bad was it before you made a profit? I mean, here's a quite a decent example. Yeah, this is a good example. So what happened here is you had a drawdown of over 3%, almost 4%, and the drawdown was, okay, this is a profit one. I'm really doing a crappy job of explaining this one. This needs more time, and we'll probably break it down into simple examples. I want to show you one or two. This one is well worth showing you. The yield curve analysis tool. I'll show you one. I definitely want to show you one more after this one. So what have we got here? I'm sure you've heard of the yield curve and people talking about it inverting and all this kind of stuff. But how did the yield curve look? Let's say, let's go back. Let's go back to the beginning of the year. So this is what the yield curve looked like, quite healthy. The further out in maturity, as you can see, from 1 month, 3 months, 6 months, 1 year, all the way out to 30 years, the further out, the higher the yield. But as you go through time, you can see what's happening it starts to flatten, and you can start in the shorter time frames, it's starting to invert. And what you do, if you could drag it all the way across, you can see that now the 10 years started to invert. And this is just a good visual of the inversion. And what we've done is you can, if it's too busy for you, you can take off some of the stuff and play around with what do you want to look at. Let's take the 20 year as well, so you can kind of see what's happened to yield curves. And what we did is we put a vertical line according to the classic definition of when does the yield curve invert, and I think it's a 2 year over the 10 year, the classic definition. We just see the classic one to look out for is the 10 year over the 2 year. When this spread goes negative, that's the classic definition of a yield curve inversion. It's a strong predictor of a recession. So you can see it's in those at that period it was inverted. It's bounced out of the inversion, but and we've just put equity curves here. You can have to see them all. You might only want to see. It's just to overlay, give you a visual there. I want to show you this one because I think it's really practically important. This lot size risk calculator. Let me quickly tell you what this one's about, and the last one I'll end with is just like a fun one. So is this one account? Let me go to this account. Okay, so I'm looking at euro dollar here. If I want to sell it, okay, and I want to measure it in lot sizes. So let's say I'm going, let's go a bit bigger. Let's go 2. So I want to, okay, before I apply that filter, you can, this parabola where you can see with what the probabilities are of certain price movements up or down, can help you establish something. So let me just do it over here. I'm going to move the dot around. You can move this green dot. So let's say I want to put on a trade that I'm prepared to hold it for 5 days, and I am, what did I say I'm going to sell? So I'm expecting the market to drop, let's say, to this price. And I'm going to click my and see what it tells us. It showed us, if you didn't want to have to go through this whole loading and all this, it would have showed you on the actual chart. But just let me tell you what it said. I didn't actually need to do that, sorry. So that's set this up. Now I need to calculate. Oh no, I need to redo it because so I want to do 5 days, and I wanted the green dot to go down. Yeah, let's go quite extreme. Let's go like this. So that's where I think things will go. And it says the probability of take profit with value of 109 for the next 5 days is 4.5% probability. If you open the sell position with size equal to 2 lots, then your profit will be equal. So if we hit it, we'll make $2,249. This is 4% of your current equity. So it's looking at your current equity. So if I use this scenario and I want to say, well, shoot, what happens if it goes the wrong way? And I want to put a stop loss at, yeah, at about 1.11. So there's a probability of this happening is 10.3%, and I'm risking $1,600. So pretty cool. You can, you know how much money you're risking. Yeah. Just want to see something. I actually don't think I've ever done this. I'm just going to see. So apply filter. If I just wanted to see one quick thing. If it goes to, so I'm selling, I've put it at money at risk. It needs to do that. I just wanted to see if it will show me the percentage of my loss. No, it's just going to tell you the amount of lots you need to trade to risk at that. Okay. And now for the last one is Twitter. Our friend Donald Trump. I thought there's OFSI news, but I'll leave that one for now. So this is just some playing around, and I think there's a lot that we can still do with this, but I'll tell you what we got going here. So you can pick whatever symbol you want to see. The real Donald Trump, we put some, I don't know which couple of, but I wanted to see, I don't want to show retweeted, I want to just apply the filters here. And what I want to see is our friend Donald Trump. You can see how he moves the market. Look at this. Sorry, I get excited when I see this. So Trump has a tweet. So you can actually see, all his tweets. I'm looking at a 15-minute chart. I can go hourly. I could see he moved the market there, and what we do is we share. Yeah, so here's a little bit easier to see how active this guy is. Hard to believe he's running the country with such an active Twitter account, but you can see. So that was a retweet. What does he say? Big United States Supreme Court win for the board on asylum seekers. I had an excellent telephone conversation with Andres Manuel Lopez, whatever. Okay, Mexico. Yeah, just a nice way to visualize what his tweets are, what they're doing on the market. So I'm going to stop sharing, or I'll leave the sharing of my screen open while I take some questions if there are any. let me just see if I'm able to unmute all. If anyone wants to talk and ask me a question, please go ahead. Have a sip of my whiskey. Keep the chat open here. Not sure if anyone's stuck around, so there's something. Let's go. Thanks, Gina. No worries. Okay, maybe it's been a long session. Let's leave it. I think you can all. I'll just actually. It's important that there is, just so you know, at the bottom of our website, there is an ideas board, and people can, share their ideas and vote on different things. So please, by all means, do that, and hopefully we'll be doing lots more of these webinars, and feel free to give your advice and feedback. If this was too long-winded, you would have preferred other things. Okay, cheers all. There's Brian. Can we see? Let me just quickly. Can we see 5 accounts together to see if the drawdown is smaller? Not sure I understand that quick. Can we see 5 accounts together? So are you suggesting this? This is what I think you're saying, and correct me if I'm wrong. So we have an ability to create a notional account. So Axie Select, this is Axie Select, and it is the combination of a lot more than 5 accounts. So we've seen it as in one view, and so some people are losing, some people are making, but Alvaro, what I think you're saying here is you want to be able to blend all your accounts together to see a summary view, and I believe we can do that. We would create this notional account, which is the sum of all your accounts, and yes, doesn't mean it will always be smaller, but yes. Then just to answer Brian's question here, leave that one with me for sure. There will be a lot more capital coming. So the fact that we've already allocated 5 just means I've got more work to do to find more money, but I know I can bring more money, and I wouldn't worry too much on that score, at least for the next 5 million. Then I need to I see what you're saying. So Alvaro, what we've actually got a portfolio builder, which that will kind of come through in the next section when you start talking about copy trading, or when we're looking at this copy trading platform. So I could show you, for instance, but it's taking you behind the scenes. We've got an investor portal where we are able to do exactly what you just asked there. So the answer is yes, but it's not visible yet. We'll need to bring that online soonish. Don't want to give it a date. Okay, folks, thank you for your time. Really appreciate it. I hope you'll gain something from tonight. Okay, that's it from me. Cheers.